Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Sean, maybe you just jump in here and do a quick walkthrough of this, including some considerations. I know you've got some strong experience across a number of different broker platforms. Maybe this is a good point just to kind of interject some color around some things that folks can look for in both brokers generally, but also just kind of point out some of the things they have in the ICE FX options here.
Yeah, absolutely. In fact, Pohan had sent me a question along these lines as well, and his question was about fully automating the trading process using the Forex options. So I'll hit upon that as well. The first thing is that because these are traded, these are universal. Basically, if you've got the symbols, you're going to be able to trade them through your broker. So you're not going to be limited to a broker that specializes in Forex or spot Forex. You can trade this basically. If you can trade options, you can trade equities, or you can trade ETFs. You're going to be able to trade the ICE FX options. Now, you may need to change your symbology a little bit. So, for example, down there with the Australian dollar pair, the US-Aussie pair, the symbol there is AUX. If you type in AUX on your charting platform or through your broker's platform and you find that the symbol is unrecognizable, throw a $ in front of that. A lot of times with the majority of the brokers that I've worked with, the $ means it's some kind of an index. And in this case, it really is measuring the value of the US dollar versus the Aussie. So throw in the $ if you don't find it. Don't assume that just because it's not finding symbol AUX that you can't trade it. Throw in the $. If that doesn't work, try a dot. Sometimes that doesn't work. If that doesn't work, call the broker's 800 number and say, look, I'm trying to trade the ISE FX options, and I'm particularly looking at this pair. Tell me your symbology so I can get that right. So you shouldn't be limited by the broker that you're working with. You're going to find these, like I said, if you can trade stocks or you can trade ETFs, you should be able to trade the ICE FX options as well. Now, these are exchange listed, so of course you're going to be getting some fast executions on these as well, and you're going to be able to see the bid and the ask. Those are going to be real-time quotes as well, provided your broker is delivering real-time quotes to you. You may want to check into that as well. Another thing, the third bullet point down there, this is one of my favorite things about this type of vehicle, is it's cash settled. So if I am, let's say I'm doing, possibly I'm selling some calls in this case, I'm not going to have to deliver physical shares. Everything is settled by cash. So if I'm profitable, upon settlement or upon expiration, I'm going to receive cash for that. And if let's say that I've sold some puts in this case, where if I'd done that with stock or I'd done that with an ETF, if I sell puts to open, I'm obligating myself to actually buy the physical shares. Not in this case. In this case, you should be getting the difference between the strike price that you sold and between the actual close on the closing date upon expiration. So they're settled in cash. That makes it very simple. It's either money in or money out. None of this getting shares or pulling shares from an account, money in or money out. I like that as well. And another point, I like to do some complex trading like iron condors. For those of you that like doing iron condors out there, it's somewhat of a market neutral strategy. I like the fact that these are European style. Now what this means is that you can trade in and out of these at any time, but there is no early exercise or early assignment. There are two kinds of options out there. There are European style and there are American style. They have nothing to do with the continents whatsoever. This has nothing to do with currency whatsoever. European style can only be exercised or assigned upon expiration, and American style can be exercised or assigned at any time. So when I'm doing something like an iron condor, I want to be sure that I can't get assigned on the high end or the low end. And I may not be, if you're not familiar with iron condors, just know this. A lot of people have concerns about early assignments when something goes in the money. You don't have those concerns with the European style. It doesn't mean there's less risk. It just means you do not have any of these surprises that can come about from an early assignment. And then finally, and I'll see if we're going to have time today to talk about a spread, you can trade these as spreads. You can do it as a debit spread. You can do it as a credit spread. You can do it as a diagonal spread, a horizontal spread. So we'll see how we're doing on time today. I mocked up a spread that I thought was particularly interesting from a technical and a fundamental point of view, but also the return on risk I thought was rather interesting as well. So we'll see if we've got some time. So there's the symbols. Be sure to write down those, or you can also check those out at the ISE website. But Rick, I'll turn it over to you to keep pushing us forward.
Perfect. All right. Thank you very much. Let's see. Here we go. Well, I didn't realize that this thing had a little graphics in it. Wow, that's pretty impressive.
Yeah, I thought you were being ambitious with that animation, though. I was impressed.
I wasn't at all. The animation just kind of snuck up on me. So let's do a little primer on technical analysis and why it is that we approach these from a technical standpoint, and how we approach these from a technical standpoint. Why charts? Why are we looking at charts? Well, one of the reasons, as I mentioned, is that currencies particularly, it's very difficult to distill out all of the fundamentals, the structural issues that come into play that influence currencies. It's a very complex analysis. Now, I'm not saying don't try to put some thought into it at all. But if you simply take it from a macroeconomic standpoint, you're really talking about dissertation level analysis, and I'm not sure that any of us really have the time or inclination to want to go there. So what do? Well, we can look at technical analysis. In technical analysis, what we're doing is really capturing the net effect of everybody else's analysis. See, the way I look at it is there's some very smart people hired by some very well-funded analysis firms. The analyst reports, the economists, the think tanks that are out there, and what they're going to do is they're going to do their own analysis. Through their analysis, they're going to issue reports. And through those reports, there are a lot of smart people that are going to be making decisions. Now, those decisions are going to be reflected in their actions, and those actions are going to be tracked through the charts. So what I'm doing is I'm just running downstream. And in doing so, I am watching what everyone else does, and that, to me, is a much easier task. So you go and look at this in the charts are the primary tools of technical analysis. You go back to where does all this technical analysis come from? Well, it actually originates back with Dow theory. And one of the things about Dow theory is that the markets tend to distill out all the information that's out there so that the consensus price on the charts is taken into account pretty much everything that's known. So what I like to do is look at that, but I like to look at it in a way that I can get the story out. Now, what do I mean by that? Well, as I mentioned just a few moments ago, it's very easy to make the charts extraordinarily complex. Some of you may actually find some strange pleasure in doing that. I had a guy that came up to me one time and he says, I would not begin to trade without Fibonacci retracements, Fibonacci fans, and Fibonacci arcs. And I think, well, okay, then you need to switch to decaf, my friend. What he's doing is he's thinking that there is a certain level of confidence that comes from a very advanced analysis. Our approach is we find the confidence comes in the simple analysis. So we're gonna look at the charts as the primary tool of technical analysis. Here's why. Your eye is going to pick out patterns in charts before the numbers are generated through the technical indicators. You've heard it said that a picture is worth 1,000 words. Well, extend that a little bit differently, and I would say that a chart is worth 1,000 indicators. The question that you want to answer every time you look at a chart, and it doesn't make a difference what kind of chart you're looking at. It could be the ICE FX options or whatever else you might be trading. Here's the question. Who's in control? What is the story that's being told here? Now, please understand, this is not to try to get a crystal ball to predict the future. What it is to try to understand as best as possible what's happening right now, both in terms of direction and momentum, and recognize that direction and momentum tends to maintain until something comes to change it. In Dow theory, what that says is that a trend is considered established and in place until the counter trend is confirmed. Well, we're just going to take that and simplify it, and we say in the charts, if we can understand very well what's happening from direction, momentum, then we're just going to assume that's in place until it tells us otherwise. And the idea here is that charts are pictures. They're analog technical indicators. We've got to process that information.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.